Oh, he's here. Okay. Okay. Okay, so this is going to be a little painful.
Okay.
Because I'm going to try and reprogram you. Okay? So you've spent your first couple of years of real estate studying single family houses, right? And traditional single family play is we go find this house at $500K and we fix it up and we try and sell for $1 million and hopefully make our 20% margin, right?
Yeah.
Something like that. Buy them at 100, sell them at 200, buy them at 50, sell them at 99, buy them at $1 million, sell them at $2 million, right? Or the play now is go find the house, Seattle, in these neighborhoods, put another house behind it, put another unit in that, and make it 3 units or condo them out and sell them, right? So that flips to a investment play, long-term hold, or it combines value add, fix and flip. Okay, does any of this shit have anything to do with the cap rate?
For people who are buying it, they're interested.
For an investment property?
Yeah.
Okay, so I'm gonna get $10,000 a month, and I'm gonna have a value of $2 million, right?
Yeah.
So it brings in 120 gross after expenses, 100,000. So it has a 5 cap. Okay. So you're telling me that if it brought in 8,000 and had a 4 cap, but it still had 800,000 in equity, you wouldn't do the deal?
And if it,
Huh?
if it was a 5 cap, I think still be good.
Okay, but it dropped to a 4 cap, but you still made 800 in equity. Should you not do the deal?
You should.
Okay, so if it drops to a 3 cap and you still made 900,000 in equity, should you still do the deal?
I feel like it's still good.
Huh?
I feel like it's still good.
Okay, but this comes down to the difference between creating fucking wealth and creating fucking money and sitting here arguing with fucking traditional people about cap rates, okay? Does the difference between a 3.5 and a 4 cap get you fucking excited, Dennis? It doesn't to me. Creating and doubling the value of the asset is what gets me fucking excited. And I've spent 30 fucking years arguing with brokers when they call and go, what's the cap rate? And you know what I say? What's a cap rate? I play fucking stupid. Like I don't even fucking know what a cap rate is. You're talking in the wrong fucking room. Don't even fucking come in here if you want to talk cap rates all day long. You can talk cap rates after it's stabilized and the value's up, but don't come in and say, oh, everybody's shitting all over it because it's a 2.8 cap right now. Fuck you. You don't even know the fucking deal. Okay? I'm trying to make you $2, $3, $4 fucking million and you want to sit here and argue that it's not a 3 cap or a 3.5. You're fucking looking at the wrong thing. Okay? So if you want to be in this room, we're talking about how do you make millions of dollars buying property, fixing it up, and then you can argue about fucking whether it's a 4.75 or a 4.82 fucking cap rate for the next 20 years. I don't give a shit. I'm not even going to be involved in that. It's going to be over in property management, leasing, and refinance. If you want to fucking tell somebody, come in and make a couple $1 million, then you got to be able to pitch the fucking deal. Right? Is this a good fucking deal, Will?
Great deal to me.
Okay, so you got to be able to sell it that this is a value add cash flow deal that after stabilization will have a great cap rate and a great cash flow. Yes, right now this current project may seem slightly high based on current income, but what fucking property do we look at that doesn't have the same numbers? Okay? If we go look at a fourplex in Tacoma and they're only bringing in $1,000 a month in rent and it should be 2.5, you don't look at it and go, oh, it's only a 1.8 cap right now. You don't give a fuck. You're just looking at it to see if you can take the value from what you're purchasing it at and move it up to some higher value and some other income. Okay? So as we jump into this commercial world and this high number of units, the formula hasn't changed. Can you buy the building at X and can you get it to a 2X value and a 2X income? Yes or no?
Yeah.
Yes, that's what we do here, or we don't fucking look at it, okay?
So,
If it won't work, we say it's a retail deal, sell it in the retail room.
for the equity play, one may ask, when do I get some equity out of this? And so, is that typically at a refinance, what you're saying?
You mean,
right?
when do you get your principal back?
Yeah.
This one is harder because we have a longer, lower interest rate. So yes. Huh?
So you go V20.
Yes. So we could keep it a lot longer. The hardest part is getting the money out right away because we will have to give up cash flow or pulling money out. And that is a decision partners should make. So in your BRRRR program that you're talking about, okay, we're going to buy the building at $1 million. We're going to put 200 down. We're going to put 300 into it in carrying costs. We're going to have 1.3 into it, and it's going to be worth more than $2 million. At that moment, you would go refinance it and pull your cash out, right?
Yeah, cash.
But if you had 4% money from a seller, right? Why would you go pay 6% for commercial money?
Yeah, could be more now actually. Right?
Okay, interest rate, yeah, they keep fucking raising them. Okay, 6.5%. So that's going to cut into your cash flow significantly. So that is a decision that the people involved in the LLC, the members, the partners need to decide what is the strategy. Okay? So you tell me somebody comes in with $1 million and in 12 months it's worth $2 million, they're pissed off.
Well, if they can't capitalize on the $2 million, it might be.
Well, then you got to get some type of preferred return or some amount of money that partner is getting until their cash gets out of the project. And if the current split isn't enough, then you would have to adjust it so that they felt they were getting something that compensated them for the money in the project.
Okay.
Okay?
And for the 60K, that's going to be gross after the, what's it called, all the value add? That's what I understood, right?
The rents will double in value. Yes.
Yeah. And our expenses are going to be roughly 30.
Well, you'd have mortgages, taxes, insurance. Exactly.
Okay. So
there's going to be $30,000 in positive cash flow.
That's okay.
Okay. What do you want to do with it?
So that'd be split in half. Or you could actually, if the person is concerned about getting some liquid back or money out of that, you would be open to potentially having them receive, let's say, 75% of that 30K?
You could adjust it so they were getting a calculated return on their money in the property.
You're open
It's called a preferred return. Yes, we're open to it.
Oh.
See, here's my problem, and I'm not picking on you. You've never even fucking looked at deals like this and you're trying to pitch it. Which is, you gotta just, if you have somebody that's interested, you gotta say, okay, I need you to talk to the guys that do this every fucking day.
Yeah.
Instead of, oh, yeah, you're right, cap rate sucks. I don't know. Oh, it's a shitty fucking deal. Okay, I'm sorry, we're trying to make you $3 million and you're telling me it's a fucking shitty deal. This is the best fucking deal I've had in years. Mm-hmm. Okay? If you're into creating wealth and cash flow, if your sole goal is to put $1 in and get $2 out in 12 months, this probably isn't the project for you. See where I'm going?
So the players here just over, let's say, 10 years, 7 years.
Okay, let's just say we did a refinance event at 4 years. You want me to do it that way?
Why would you want the money back from this administration anyway? We'll wait till that.
Well, the number one goal we have here is how fast can you put money in and get it back out so that you can go bake another cake?
That's a major concern for most of the people I talk to.
Because we're talking to the wrong fucking people. Mm-hmm. We're talking to small fucking people.
Well, tell
But
Joey.
the big ones just want to buy it.
Thank you. This is fucking Goldilocks and the Three Bears. Too small, too big. This one's just right. You got to find that 5% in the middle that it works for.
Yeah.
Okay? Which is going to be a high net worth person who has some liquid cap, that he put in some real estate, that he's considered and forget it for a while.
Yeah, park it for a while.
You with me?
Yeah.
Okay, so let's just run through it as if you're a fucking tech guy. Right, Dennis? You're the tech guy. You created a fucking Wizit app and you sold it for $180 million. And you're done chasing hookers and coke and Monte Carlo, and you want to put some money into.
Yes.
You're never done doing that, are you?
I sunk my yacht.
Okay, you sunk your yacht.
My yacht.
Okay. Okay. So we buy a building at $8 million and we make it worth $16 million. You with me?
Is that the perceived value after the project is complete, right?
Yes. If you go look at all those little fucking numbers that are like it's 6-point font and read them out through 10 fucking years, and you get a waterfall and you get extrapolations of annual appreciation on both the property and the rent, you get to a $16 million value.
Over a course of, you were saying 5 years?
I think we got to 5 years to 16. There's a 4 years, Chris. 5?
5 years to 16.
Okay, 5 years. I want fucking WSU math. I want simple fucking math.
Yeah.
Because you're my oligarch from fucking Ukraine who's done fucking models and flew into town just to do a real estate deal.
A lot of editing in this video.
No, we don't edit shit. Fuck you if you don't like me. Get the fuck out of here. Go drive your fucking Uber. You came in here to fucking learn how to make money.
Come on, man.
I did. I'm saying for YouTube terms of service.
You ever get anybody getting busy in the back seat?
Once.
Okay. This isn't Vegas Uber. This is fucking Seattle.
It was kind of rough.
Okay, that's cool. All right. So our oligarch here says he'll come in for $2 million for 50%. Right? You with me? Okay. And because you're an asshole, you say you want 8% preferred. Right?
The cap rate?
Huh?
The 8% preferred for.
No, you just say, I know I get my equity, but I want to make sure I get 8% on my money before I get any split.
Okay.
Okay? So we say, okay, you fucker, we'll pay you first every month before we get any money. Right? Fine. You got the cheese. You can make some of the rules.
Mm-hmm.
Okay. So we fix it up. Right? So we put $1.5 million down. So it's whatever. We got $7 million. So now we have $9 million equity in the building as soon as it's done. Right? You with me there?
Yeah.
Okay. Of which we have your money and we have $7 million in lift. Okay? So you just made $3.5 million on your 2. Right? And you were getting a preferred rate. Let's just call it 10% for easy math. Or $200K a year. Right? You're going to start getting a percentage of cash flow. You're going to get depreciation as a member of the LLC. And at some point, when do we want to do it? Whenever you're done with the Cannes Film Festival and chasing models, we say, hey, Dennis, let's refinance. Yeah, I don't care. Whenever. Okay, just give me my money. Right? Because at that point, we're going to refinance. So let's just say we refinance at $10 million. And you get the first $2 million, and each of the partners pull out $500,000. Refinanced it so we could get 2.0 back, 500 for us each. Okay. So at this point, you have your $2 million back. You have 500 profit. You've been getting whatever that fucking number is, 200 a year. Let's just say 15,000 a month forever. Okay. At that point, your 15,000 goes away, and you get 50%, which happens to be 15,000. Wow, amazing how that worked out, right? So now you own 50% of a building. You have all your money back. You have 500,000 extra profit. You've gotten 200,000 a year for 3 years, right? That's 600,000. And now you own a building worth 16 million with 3.5 million equity in it, none of your money in it, and you're getting 15,000 a month. And you're going to tell me that doesn't fucking work.
Does work.
Oh, you know, but it's like you're.
It doesn't actually.
Oh, it scares me. What would fucking scare you?
It scares people because
Because why?
their money's tied up.
That is fucking what real estate is. So the other alternative is use other people's money to buy real estate.
And they don't have all the full power to decide when they do refinance or exits. They
You
feel
can
like
make it into the operating agreement that we have to mutually agree, and you have just as much control as we do.
okay.
Okay. Or do it on your own.
It's only 5 years.
Okay, write me $1 million check and I'll give you this deal. I mean, see where we're going? So generally, if you want to go make $1 million assignment fee, wholesaling, you got to have something that everybody fucking wants. And then you got to make them take it from you.
Mm-hmm.
Right?
Yeah.
And the only way they're going to take it from you is if they know they can't get it without paying you. Which then it's easier to say, Dennis, instead of you paying me $1 million fee, just come in as an equity partner. We'll do all the work. Well, I want to do the work myself. Then you're just a fucking buyer. Stop talking to us. Okay? We'll let you know when we have one we're selling. But you've got to find people that understand how much wealth you can make in one apartment building. Okay? I'm sorry, but I know 720,000 annual in income isn't that much from one little apartment building. That's fucking sarcasm. Right? It's huge.
I'd be all
Okay.
over this deal about it.
What?
I'd be all over it. Yeah. I see the value.
I know, but this is where I'm saying you can't walk in day one, never been involved in apartment buildings, and pitch an incredible deal to traditional thinkers.
Yeah.
We are a value add space. We are off market. We are owner financing. Everything we do adds value. Okay? Then you can run your traditional numbers. After it's stabilized, after all the rents are at 60,000, put whatever fucking little slopey lines you want to put on it. 6% appreciation, 5.8, 7.2, whatever you want. But until then, we're just buying the fucking building, we're doing our magic, and we're getting it up in value. Okay? So I'm not trying to yell at you, I'm yelling at the world because people think very traditionally when it comes to investment properties. All they fucking care about is the cap rate. Okay? I don't care if it's a 4 cap building if I have no fucking money in it, right? If you're getting a check for $15,000 a month from your equity position and you have no cash in the deal, do you really fucking care what the cap rate is?
No.
You only care if you want to try and sell it. Because then you go get the fucking suit and tie boys that fucking do 87 spreadsheets on how great it is and the walk score and the future value of it, and then they can sell it on a cap rate. They can sell it to the guy who wants a 4 cap, fully turnkey operation.
Why in an apartment building if you want to flip it? Isn't that that's the whole point about
You're cutting down your tree. You're cutting down your orchard if you sell it.
Yeah, well, that's the whole point about being in a multifamily. A building like that is to be cash flow.
Okay. Without doing 5 to 8% appreciation or 4% increase in rents, who can do 720,000 times 10? I can. 7.2 million in income over 10 years. 10 years isn't that long. Dennis will be like 31 by then. 31. The young kid will be old by then. Okay? 10 years isn't that fucking long. But you're going to tell me that's going to bring in 7.2 million in income over 10 years. And you don't want to do the deal.
They get half of that pie.
You get half of that pie. You telling me I want to fucking shoot myself. Because you're talking to traditional thinkers, traditional brokers, how people are trained to traditionally look at properties. And that's fine if it's a retail turnkey deal that's fully stabilized. But if you're in the value add world, you got to look at the whole picture. But you're right. The important picture is how much capital do we need? How long do we need it? How do we get it out?
Yeah, because I had one person I was talking with and they were concerned. So interest rates, they're saying inflation, let's say if 15% go up, what's the cash out refi? Now the equity drops and now it's pulling out your money out of that building is going to be extremely difficult, all that stuff. So that was a major concern.
You could have a clause in there to refi at a certain point. You could have an equity buyout where you swap out one partner. There's 1,001 fucking solutions. But if we're all going to sit here and go, the world's going to fucking end, Ukraine and Russia's going to go on forever, China and Taiwan are going to start fighting, crazy North Korea is going to fucking go crazy, Joe's going to run again, woo, we're all excited, aren't you? 3 a.m. drop for fucking announcement that I'm running for president. If I'm running for president, I'm a 5 p.m., 6 p.m. primetime fucking announcement. I'm walking out like a fucking peacock, right? Instead, he buries it at 3 a.m. Fucking, a little line. Yeah, I'm running for president. Like, you might as well done it Friday night, like when nobody gives a shit, right? So, but where I'm going is we can all be doom and fucking gloom, or we can look at it and go, no more apartments are going to be built. Nobody's building houses. Fucking another 100 million people are going to be in the United States in the next 30 years, all living within 100 miles of the coast. You can either be positive on that, or you can be fucking doom and gloom. We got a deal tied up for 7 fucking years at 4%. If that isn't enough security, Dennis, I don't know what to fucking tell you. Meaning you got to learn to take all the positives from the transaction and then go find the person that would be interested in doing it with you. Or you want to go sell it? Sell it. Bring in a check for $1 million, I'll sign it right now. Okay?
Okay.
So trying to get you guys to think how people make millions in real estate doing non-traditional real estate, which is we're focused on things that the average guy isn't. And that's how we're able to create value. And we're buying through strategies that allow us to use owner financing at much lower rates than traditional rates are right now. Okay?
Yeah, that's good stuff.
So if you get somebody interested, let us take over in terms of talking to them about the deal.
Yeah.
Because I think you're saying the wrong thing just because you don't know. And you don't have the rebuttals to the questions.
When you're agreeing with their objections.
Yeah, I agree. There's limited knowledge. But this is where you come in. That was very...
Great. We can send them this video right now. Right?
Yeah.
I'm being serious. Send them the fucking video right now. You want to make fucking $8 million over 10 years? Come in. If you're, oh no, it's kind of risky. How the fuck is this risky? It's a fucking beautiful building in an A location, an A property where you can double the rents. I see very little risk in it.
It is true.
Other than Seattle getting fucking nuked out.
Sooner or later we'll have
Then we're all fucked.
Yeah. No,
We're 50 miles from Banger.
Banger. All right. Okay, thanks, Will.